Hey everybody, today is Wednesday the 28th and the S&P pulled back right down to the bottom end of this range that we've been talking about and the anchor from this gap up here. So we remain really kind of neutral, but we are now below the declining 5-day moving average. So that makes us a little bit more cautious. If we're to see this level break, then what we would be looking for is maybe something along the lines of a drop down towards this level. And then, of course, we'd be looking at the daily time frame where we see that 50-day moving average at about 549 in that same exact area. So these are the key levels to be aware of. And then we have the anchor from the all-time high. But for now, I think it's just a little bit more neutral. Obviously, with NVIDIA earnings coming up in about 20 minutes, that's going to impact these markets a lot. Hopefully it doesn't. You know, it's just one stock. It is the largest, or one of the largest, I think. Not that I think it is, but anyways, the NASDAQ came down to the level we were hoping it would today. This is what we spoke about in last night's video, coming down to the conjunction of the anchor from the all-time high, as well as the anchor from this handoff right here. So this is our first level of importance, and right now we do have a pattern of lower highs and lower lows below a declining 5-day moving average. That's the key right now, is to keep an eye on that. That's the pattern. In order for this market to become positive again, it's got to get back up above here. Just getting up above there wouldn't be the best thing, but instead to create a higher low and then to go would be the better way to see that happen. Otherwise, you know, keep an eye on the 20-day moving average down here. And again, we've got a big earnings report, so that's going to impact a lot of the way the trading goes in here. Russell 2000 is so far at least finding support where it had previously found it. I don't think it's prudent to look to buy right here because the pattern is lower highs and lower lows. So this group has been tricky, to say the least. I will continue to basically ignore the Russell 2000 and focus on the action in the individual names instead. Semiconductors came right down to the level, well, a little bit below that level. I was kind of thinking that maybe they would find buyers at the anchor from the all-time high. Instead, we dropped down to the anchor from this low, and we have the same pattern here, of course, as the NASDAQ, which is lower highs and lower lows below that declining orange 5-day moving average. If we see further weakness in here, then maybe we see something like this and we drop quickly down to the anchor from the August low. That's going to be an important level still. That's at about 232, and that would greatly undercut that 20-day moving average as well. So just be aware of the fact that we're going into this big catalyst with a little bit of negative sentiment in terms of the group. But it's possible as well that tomorrow we see a gap up, and then I would say don't chase the gap. Wait for the buyers to get back in control above the VWAP. And then if you wanted to be a buyer on that momentum, to be a buyer here with a stop below the low of the day. That is once it reclaims VWAP. If that's what happens, that's the type of scenario I would be looking for if it gaps up and looks like it's going to continue to rally. Biotechs are pulling back a little bit. They're right on their first important level of potential support at this round number of 100. I would like to see at least an undercut of the round number and trap some people if it's going to come up quickly. And if it does, then you can look at this as a shoulder, this is a head, and this is a shoulder. I'd still like to see it just consolidate a little bit more, but this weekly time frame really is what remains most bullish, as I mentioned in the Friday video, that it's got great potential up in this area. So this is the group I think makes the most sense to continue to focus on, not necessarily to purchase yet, but to focus on and start getting familiar with what you want to do if the buyers do in fact regain control. Financial stocks have been just monstrous here to the upside after breaking that resistance. As I said, I was looking at it very cautiously, thinking, well, it was extended when it broke out. So sometimes we see that those extended breakouts trap people, and from failed moves come fast moves. That didn't happen. Instead, we continue to see these higher highs and higher lows. As I point out to Alpha Trend subscribers yesterday, these are the higher lows. You want to protect your stop up underneath whatever one of these higher lows makes sense for you and your time frame. But the trend is clearly bullish on those financials. It won't be forever, so just have a strategy in place for locking in your gains. Energy names, they just continue to be a mess. It's just all there is to it.